All right. Happy Tuesday. Let's look at Cardinal Health CAH today, although this isn't today. This is the 26th of February. And I want to talk about a setup here because this is the kind of thing that can be repeatable, which is what we want. It's kind of like a golf swing. You know that you're going to be on the right track if you've got a repeatable swing. And of course, the results of that swing are not a worm burner or a shank or hitting one on the beach all the time. So this is what we're looking for in trading. We want to be able to hit them right down the middle. So what we're seeing here is this is a stock. It's in an uptrend. By the way, the healthcare sector has been doing pretty well. Depends on which stocks you're looking at, but a lot of stocks have been working really well lately. So, and this is one of them. But you can see how this move off the 50-day moving average leads to a really nice trade, and then a sideways consolidation. This really traded sideways for like 2 months. Okay, before doing what? Before moving up again. Now look at the volatility. So this thing gapped up a little bit, actually a lot on earnings, and kept running. And then the next day, everybody came in the day later and said, "Oh my God, I don't want to miss it." Stock gapped up, and then it traded down, not in a huge way, percentage wise, but 4.5%, and then off to the races again. So if we're just though looking at the 50-day moving average, we get a better idea of the overall trend rather than trying to follow the volatility and make sense out of every single move every single day. A lot of times, guys and ladies, the way a stock moves on any given day isn't really going to make sense to you. But what you want to be thinking about is this: which way I like to look at I always look at the 50 and the 200-day moving average. Shoot, I can even put in one of these. How about this? Moving average. We'll do simple, and we'll put it here, and we will make it 150. And we'll make that a green one. Okay, and we'll make it really thick so we can really see this sucker. Okay, so I like to look at these moving averages because they can give me a sense, even if I'm not even looking at the price itself. If we eliminate the price from this chart and just look at the moving averages, you can still see what's going on here. Everything's trending higher, and they're in a nice hierarchy where the 200 is below the 150, which is below the 50, and then the price is above the 50, though that's not an absolute prerequisite. But we get these pullbacks, and the pullbacks tend to be where the buying opportunities are. If you're chasing a stock that's gone well above the 50-day moving average, in this case over 10%, you're kind of late to the party. Here, this is up, 7.5%, and then the stock pulls back. So we're looking at this here last month, right? Late last month, and we're waiting for the right entry. And this could be it. Oh, down. Okay, so this is a good thing. Like, we're getting closer to the 50-day moving average. Now, if you happen to get like an up day, maybe that's time to take a little position and keep a stop just a little bit below the 50-day moving average. We don't want to do it on a down day because you never know if it'll just keep going. But we want to do it on a day where there's evidence that buyers are coming in. Okay, so that's here. So you could actually start building a position after two high volume, higher than average volume selling days. And this day here was a total reversal, just a big wipeout of buyers here. On this, it's called a tombstone doji. On this day here, you're buying the stock. You're starting a position with the idea that the stock will not fall below the 50-day moving average. It's an early entry, okay? And then still okay, and then bam, you're stopped out. Okay, this is why you take small positions. Stopped out, it doesn't mean the stock's dead. Look what happened over here. Same thing, but it's stopped out. Now we're wondering whether we're going to get a recovery, like a reversal recovery right away. We didn't really get it there, but happy that we're seeing a higher close relative to the open, but still, this is a stock to stay away from. Now, this is a stock to look at again. Now, at this point, we're on the 12th of this is just last week. But at this point, you can say, well, maybe, okay, I was right. According to my thesis, I'm buying a little bit early, very tight stop, so very low risk. And now, bam, I'm shaken out. But I'm still okay having bought this here. Getting shaken out's a part of trading as long as you're not getting crushed. And then I see this. Okay, well, then maybe I was actually right after all. This just pulled back, kind of like it's done here, kind of like it's done here, all within an uptrend. And so now we've got this 50-day moving average. Now we're looking for evidence that this is really, truly going to rebound higher off the 50-day moving average. Now we're on Thursday, if I recall correctly. Crappy day in the market. Now we got a move higher, and then guess what? Boom, higher still on the 17th. That's Monday, and then it leads us to today. Bam. Now we're up pretty nicely, another 1.4% move. So I've just kind of walked you through a tentative buy, an early buy that ultimately got shaken out. Now, if you wanted to keep a looser stop, well, I'll give it a 5% stop or whatever. You could do that. You wouldn't have got shaken out. But my stated thesis for getting into the stock here is this is a rebound that's likely to hold the 50, and it didn't. So, okay, crap, I'm out. But then back here, we're looking at this. We've still got a little bit below average volume. And so a better time to be buying, frankly, would have been yesterday. But guess what? I was on a plane coming back from Dallas. Don't ever go there. It's really flat. But anyway, so I couldn't make this. I couldn't make this trade if I had seen it. So this would have been a better time, right? However, this is only up 1.4% today. So we could frame this trade. Getting this out. We can frame this trade a little bit differently than this because we're buying the breakout. What I would look at here is, a little bit below average volume. That doesn't feel great, but I like the move. What I wanted to see was heavier than average volume on this kind of move. So we'll look at the weekly chart. Nice uptrend here. So this is institutional buying coming out of a base just in like multi-quarter base in 2024. And so now I've got this pullback. It's kind of like a touch and go where the stock pulls, it's in an uptrend, it pulls back, it kind of gradually comes back to the 50 and then moves higher again. That's kind of what we've got here. It would have been nice to see volatility a little bit lower. But so what you're doing here is hopefully even the stock will pull back a little bit, but let's say it doesn't. So what you're doing is you're buying here, anticipating that the stock is effectively, here, we'll do it this way, is effectively breaking out above this resistance. And so you're buying the stock here, and you can say, well, I need to see the stock fall clear down below the 50-day moving average in order for me to know that I'm wrong. That's 4.5%. You could do that. My preference would be not to do that because I will know based on the way this thing's trading, and it is away from the 50-day moving average, I'll know whether I'm wrong to make the trade. Frankly, if the stock falls back below today's intraday low of 129.50 or 129.49. So I could be buying this stock tomorrow and looking at 130 as a logical support level after this broke out. I could keep a stop maybe at literally 2%, another small position to open up the trade. 2% to the downside, which would really mean that I need to be getting 4% to the upside, and that would take us to about 137. I can make that trade. So give this a shot tomorrow, see what happens. Like I said, hopefully, if the stock just kind of stays here and does nothing, then you do nothing either, because that tells you that this breakout has kind of run its course. And then you want to be waiting patiently for the next move down closer to the 50, where you can be buying on pullbacks and start to build a position. Bottom line, though, is this. In this kind of market, you really need to be trading small because it definitely penalizes aggressiveness, and the rewards that you're getting are not as great, hey, as they used to be 6 months ago. So always respect your risk, know why you're buying this stock, where your stop is, where your oh crap, I'm wrong level is, and then keep a stop there. Fractional position to start with. That's all I got for you. Okay. Hope you're having a great week so far. I am, and I'll see you next time.